Yes, this is your teacher Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. I am back with a bang. Yes, today we are going to solve the question of May-June 2025, variant 42, paper 4, question number 2, which belongs to the standard costing. The question is right in front of you. You are seeing that's the same question. So let's try to solve this question. And inshallah ta'ala, as usual, inshallah, my guesses will come in the future as they were coming in the previous years, and I will continue to upload the videos of the recent exams of May-June 2025 regarding O-level AS and A2 questions. As soon as I will get the questions from my colleagues and from my uh, resources, right? So this is the question of May-June 2025, which was held on, that it was held on 15th of May, right? So not 15th of May, I'm sorry. It was held on 24th of May, actually. And I'm having that particular paper with me, and I'm going to upload this question to you right now. Okay. So W Limited manufactures one product, May June 25-42. Question number 2, which is for standard costing. W Limited manufactures one product and operates at a full capacity. It makes and sells 11,000 units every month. Per unit standard data is as follows. Selling price 92.5. Direct material 4 meters costing 4.6 per meter. Direct labor 3 hours they paid at 11 per hour. Fixed overhead 17.9. This is fixed overhead per unit. Remember, this is fixed overheads per unit. Sir, how come you know that? Okay, let's see. This is per unit. Standard data is as follows. Per unit standard data is as follows. So fixed overhead is 17.9 per unit. The company had always made the product in metal. Its cost rose suddenly to 7.8 per meter due to a worldwide shortage of the metal. So because of the metal has become more expensive, so rather than 4.6, now we are getting the cost per meter at the rate of $7.8, which makes us impossible to purchase it. The decision had therefore been made to make the product out of plastic instead of metal from April 2025. The directors were unsure whether this would be a short-term or long-term change. Actual results for April 2025 were as follows. This is standard data. This is actual data. Sales for 11,000 units, direct material at 2.5 per meter now. Obviously, according to standard, we were purchasing the material at 4.6 per meter. But now as we are using plastic, the meter price has gone down to 2.5, which we want to basically achieve. Direct labor is at for 39,600 hours, and fixed overhead, actual fixed overhead 2,12,000 is given in the question. So what is the difference in this question? Remember that as I have solved the standard costing questions in the past also, see that your standard units, your budgeted units are the same as your actual units. Actual units are 11,000, see, and the budgeted units, it makes and sells 11,000 units every month. So budgeted units are also 11,000. So it means that there is no sales volume variance, there is no cost volume variances, and there is no profit volume variances. You just need to go for a reconciliation from the standard profit, or you can say from flexed profit to the actual profit, because there is no volume variance at all. So whatever is going to be the standard profit, that is going to be the same as flex profit. Okay, now let's move forward. This is something new in the question, because complete the following table to reconcile the standard profit for April 2025 with the actual profit using the required variances. Sometimes students has such an idea that standard profit means budgeted profit. Remember that if you start with budgeted profit, you have to add or subtract profit volume variance to find the flex profit, and then all these variances will be adjusted: sales price, material price, usage, labor rate, efficiency, and fixed overhead to find the actual profit. Then, sir, why it happened? It didn't happen over here, because that the standard profit is the same. The flex profit is the same as the budgeted profit. Why, sir? Because the standard profit for actual units, which is the flex profit, actual units are the same as the budgeted units. So it's clear that the standard profit and the flex profit is the same. So we just need to go to find the standard profit, start with the standard profit and find the actual profit. So let's calculate the variances now, because we have to go for this favorable and adverse. favorable variances will be added and adverse will be subtracted from the standard profit or budgeted profit to find the actual profit. Because standard profit and the budgeted profit are the same. Because the actual units and the budgeted units are the same. And that is the reason that we are going to have the same, the data is going to have the same results. So let's move on. So if you just see the question, it is right in front of you. And if you just see that it suggests, let me make it a little clear to you now, that the 11,000 units are there. Let me picture a little bit side. This is 11,000 units. Let's scroll it down. Okay, now, right? So we are having W Limited manufactures one product, operates at full capacity. It makes and sells 11,000 units every month. Per unit data, standard and actual is given, and we have to go for a reconciliation. So let's find the first variance, which is sales price variance. So we will start from sales price variance, which is going to be the actual units sold into actual price and actual units sold into standard price. You can use the other formula also if you want to. That's not a big deal. It's up to you. I'll go with that because it becomes more easier and more compact as per my suggestion. So let's go for the actual units. Actual units are going to be, which are given in that is 11,000, because there is no difference between the actual units and the standard units. So actual units are 11,000. And what is the actual price? We need to calculate the actual price. So what I will do, 935,000 is the actual sales. Divided by 11,000, we will get the actual price. Let me calculate. That is 85. So 11,000 into 85. And then actual units, 11,000 into standard price, which is 92.5. How come, sir? Let's see. Standard price is here, 92.5. So let's go for the calculation. So 11,000 into 85. That is going to be 935,000. Obviously, it will come the same. And then 11,000 into 92.5. That is 1017500. 1017500. Now let's go for the difference. It is clearly so 1017500 and minus 35,000. The answer is basically in negative. So it means that we have adverse sales price variance, which is 82,500 adverse. Because why? Because the actual selling price is less than the budgeted price. So we are going to have a loss because we are selling the goods at a lesser price than the standard, right? Now let's move forward. I have to calculate the material price variance, right? Which is basically calculated actual kgs into actual price. Oh, sorry. Actual kgs into actual price. And again, actual kgs into standard price, right? This is going to be the material price variance. Remember this, that sales volume variance, we can't calculate sales volume variance, although it is not required while calculating the flex profit to the actual profit, but it is not even that we are not able to calculate that even. Why? Because the actual units sold are the same as the budgeted units. So let's find the actual kgs. 115,500 is the actual actual material cost. Divided by 2.5, you will find the actual kgs. That is 46,200. So let me write here 46,200 multiplied by 2.5, and then again actual kgs 46,200 into going to be 4.6, which is the standard price. How come, sir? Let's see. The standard price is 4.6. Okay. So we are done with that. 4.6 and 2.5 is the actual price per kg. So let's calculate that. This price is going to be 115,500, which is already calculated. And 46,200 into 4.6 The amount is 212. Just a minute, 212520. 212520. And if you just find the material price variance, you will see that your actual price is less than the standard price. So material price variance is favorable. We are getting a benefit because we are using plastic now. And because of using plastic, we have a favorable material variance, price variance of 97020. You can't even imagine that how I got this paper, and inshallah I will be able to get the paper in the future also. So that's why I used to say number one accounting teacher in the world, because nobody can give guess. I have so many times I have asked teachers to go for it. Either you belong to UK, Canada, Australia, America. So I'm ready for it to face the music in October, November also, right? That's why you will not find any question, any solution uploaded anywhere else on the social media or on any YouTube channel except my channel, Learn Accounting with Sir Haris. And this is because of your support. Thank you very much. So 97020, 4.6, and that is going to be a favorable material price variance. Let's move forward. And then now I have to calculate the material usage variance. And material usage variance is basically, we can calculate, it is the difference between the actual kg into, same, which is written right now, in actual kg into standard price. Over here, actual kg into standard price. This second part, will be taken as the same. And here I will use the standard kgs. And this is going to be a technical point where student used to find it little difficult, multiplied by standard price. So actual kgs, we know that 46,300 multiplied by standard price is 4.6. Over here also, obviously standard price is going to be 4.6. And this amount we have already calculated. This is 212520. Now standard kgs. Standard kgs means actual units according to the standard, actual at standard. Actual units per standard के हिसाब से कितने kg लग रहे हैं? Actual units are 11,000 units and the standard kgs used is 4 meters per unit. So 11,000 into 4, we will get the standard kgs, and that is going to be 44,000. I can write here just for the understanding purpose, 11,000 into 4. Now 44,000 into 4.6, we will get the 202,400 is the answer of this particular fraction. 202,400 minus 212,520, we will get the variance 10,120. And again, if you just see that this is going to be a favorable adverse variance, sorry, because of the reason 10,120 adverse variance, because of the reason that we should have used 44,000 kgs, but we have used 46,200 kgs. So 2,200 kgs have been utilized more than the standard. So that is why we have an adverse variance. So always remember that sales variances and profit variances, if they are coming positive, they are favorable, negative, adverse. But in cost variances, either it is material, labor, or overhead. If they are coming positive, it means that that is an adverse variance, right? And if they are coming negative, it means that it is a favorable variance. So reverse impact it will be given. So now I'm going to calculate the labor variances, where first I will find the labor rate variances. So actual hours into actual rate, and again actual hours, because that is the difference of the rates only. Actual hours into standard rate, right? Actual hours into actual rate and actual hours into standard rate. Let's find out the actual hours. Here it is given, actual results are given 39,600. So let's do that. Actual hours are 39,600 multiplied by actual rate that we can calculate. How come, sir? 443,520 is the actual labor cost, right? If you divide it by 39,600, you will get the actual labor rate, which is 11.2, right? So 11.2 is the actual labor rate. So I will write here 443,520 Total amount is there. I have written 443,520. Okay. Now actual hours, which are again the same, 39,600 into standard rate, which is 11. How come, sir? Let's see. Standard rate is 11 per hour. So that's clear. Now let me multiply it. 39,600 into 11 will get 435,600. So let's write here 435,600. You can see that the rates are basically, if we talk about labor rate variances, actual rate is higher than the standard rate. So obviously labor rate variance is going to be adverse. So 435,600 minus 443,520, the answer will be 7920. Okay, so I will write here 7920, which is going to be the adverse labor rate variances because you are paying more rate per hour. We should have been paid 11 per hour, but we are paying 11.2 per hour actually. Why? Because maybe the labor is more skilled, labor is expensive. That's why we are paying more to the labor, and that could be the reason for this particular point. Okay, now let's move forward. Now I will calculate labor efficiency variance. C5 labor efficiency variance. Let's calculate it. The formula is the second part of the first solution is going to be the same actual hours into standard rate. And then, yes, standard hours into standard rate. So normally students used to calculate standard hours in a wrong way. And that's why generally we find wrong answers in the examiner report also, because standard hours calculation is quite technical. So this answer will remain the same, 435,600, but I will still write them just for the understanding purpose that actual hours multiplied by standard rate and then standard hours multiplied by standard rate, which is 11. Now let's calculate the standard hours. Standard hour means actual units. On actual units, how many hours are used according to standard? Actual at standard. Actual units are 11,000. And according to standard, we consume 3 hours per unit. So 11,000 into 3 is going to be 33,000. So the standard hours are going to be 33,000 into 11. Let me calculate it for you. 11,000 into 3 will get the standard hour. Let's see. Yes, 3 hours. Okay. Now 33,000 into 11 will get 3,63,000. So 3,63,000 will be having the standard. Now let's calculate. If you just see that we should have taken 33,000 hours to produce 11,000 units, but the labor has taken 39,600 hours. Again, the labor efficiency variance is adverse because we are taking more time to produce the same number of units according to our standard. That is going to be 72,600. Okay. So 72,600 is going to be the answer, which is again obviously adverse. I shown you the answer has become positive. 435,600 minus 363 you will get adverse is positive, but still this is an adverse because it is a negative impact. Now let's calculate the overhead variances. So let me go for over here. Fixed overhead variances, which is the difference. Let me see that which variance he has asked for. Fixed overhead variances. Yes. So total fixed overhead variances. You know that in fixed overhead variances, we have two types of variances. Yes. Overhead expenditure variance and overhead volume variance. And again, in overhead volume variance, you have two variances, capacity and efficiency, right? Capacity and efficiency variance. But we are not considering that. We are finding fixed overhead variance in total. That will become our question more easier. It is the difference between actual overhead cost and the standard overhead cost. Sir, why we are not using the other variances? Because in the question it is given in reconciliation, he stated that you just need to write the actual overhead cost and the standard overhead cost. Only takes fixed overhead variance. Actual overhead cost is 212,000 and standard overhead cost is going to be 11,000 units, actual units according to standard rate at the rate of 17.9. So 11,000 into 17.9, we will get the standard overhead cost, which is 17.9, which is the same as budgeted, because the volume variance, there is no volume variance. The actual units and the budgeted units are going to be the same. There is no difference between them. So that is 196,900. Let me write here 196,900. Again, the answer is coming positive. It means that it is an adverse variance of 15,100. Okay. So I have calculated all the variances. And now I'm go for the reconciliation. This is again, I'm telling you, this is an adverse variance actually. Why is that? Because the actual overhead cost is more than the standard overhead cost. Right? Now, let's move forward. Now we'll go for this reconciliation. But in order to find the reconciliation, we are done with all variances. But in order to find the reconciliation, here is the answers, the question which is given. In order to calculate, we need standard profit. So you have to calculate standard profit and you have to calculate actual profit also, so that both answers should tally. So the standard profit is basically 255. I will write here. The standard profit is basically 255,200, right? And the actual profit is basically 163,980, right? 163,980, 255,200. Now let's calculate them. I've just made you write this. For actual profit, you can calculate sales is given, actual sales 935,000 minus direct material 115,500 minus direct labor 443,520 and minus fixed overhead, you will get the 163,980. Now let's talk about the standard profit. Standard profit means budgeted profit. So you can find out the selling price minus all variable costs per unit and then multiply it with 11,000. Because per unit we have 4 into 4.6, we'll get the direct material per unit, which is 18.4. 3 into 11 is 33. So you can calculate the variable cost per unit, which is 18.4 plus 33 plus fixed overhead 17.9. Total variable cost is 69.3. Now 92.5 minus 69.3, you will get the contribution per unit, which is 23.2. And this 23.2 will be multiplied with 11,000 to find the standard profit, which is very, very easy, that it is going to be 255,200. So 92.5 minus 18.4 minus 33 and minus 17.9, you will get 23.2, and then it will be multiplied with 11,000 to find the standard profit, which is 255,200. Right? Now let's go back. Now I have calculated the standard profit also, and I have calculated the actual profit also, and I have written that also. Now through variances, I will go from the standard profit or from tax profit to the actual profit. Sales price variance, if favorable, will be added, adverse will be subtracted. Material price, material usage, labor rate, labor efficiency, and total fixed overhead variance. So let's do that. Let's write down and we'll see and write down that. So sales price is 82,500 adverse. Material price is 97020 favorable. Okay. So 82,500 sales price variance is adverse. So I will write here. And material price variance is 97020 favorable. It has become favorable because we are going for a plastic. We're using plastic rather than metal. Material usage variance is adverse. That is 10120. Yes, I can show you also. No problem. Material usage variance here, 10120. Here it is written. Then labor rate variance adverse 7920. Labor efficiency variance adverse 72600. Okay. Labor rate variance adverse 7920. Labor efficiency variance adverse 72600. And fixed overhead, total fixed overhead variance is also adverse 15,100. It is given fixed overhead total variance, so we are also using the total fixed overhead variances rather than distributing it into its categories, expenditure and volume 72600 adverse, and overhead, total fixed overhead is 15,100 adverse. So I've used the same scenario. And now I can calculate the from the the reconciliation from the flex profit to the actual profit. So the standard profit of the flex profit is 255,200. I will add the favorable variances, which is 97020, obviously, and I will subtract the all adverse variances, which is 82500 sales price, 10120 material usage, right? Then labor rate variances of 7920, labor efficiency 72600 minus 15,100. You will get the answer for this particular question easily, right? So this is how we are done with this question. But remember that this is a 14-mark question. We have some other parts of the question which we are yet to do. So let me take it that which other parts have come. So just wait. I will go for this particular. Okay. So let's move forward. So we are done with that. If you want to calculate, you can 255,200 plus 97020, and you subtract, you will get the actual profit 163,980. You can check it. Okay. Now the next part of the question, which is not available right now. So I have this February March 25-42. Okay. So which are not available right now, I'll share with you. The next part was of 4 marks. This is 14 marks question, and next part was of 14 marks. And this that particular question has basically wanted us to find the okay. So next parts of the question, that was theoretical part, 4 marks, and then there were 8 marks question or 7 marks question of theory. So the 4 marks question states that what are the advantage and disadvantage of standard costing? Advantage and disadvantage of standard costing. So advantage are that standard costing is basically used to compare the results and to find the differences, right? Then standard costing is used to go find go for the inventory valuation. It is used for inventory valuation. Then standard cost is basically the cost with which the actual results are compared, and then corrective actions are taken. The remedial action are taken through standard costing, right? And it is the cost of it is a unit concept. That cost of a single unit we use to find that, right? So standard costing is also used for management by exception, that those variances, those which have much more diverted with the budget, we just need to use those variances to find the answers for that, right? So these are the 4 marks question. And then the 7 mark question are that either we should change our material from from the usual material cost. We should go for the change of the material from usual material cost, because the company had always made the product in metal. Now, because the cost has rose suddenly, we advise that either we should go for this change in cost to increase the cost, or we should go to the plastic material rather than metal. But the directors were unsure whether this would be a short-term or long-term change. So remember this, that we should go for this change because of the reason that the plastic material cost is 2.5, whereas the metal cost was 7.8, which is much higher than the plastic material cost. So we should go for the change. But remember that the quality should not be compromised, right? If we can produce the same quality, and we don't know that either it is for a short term or long term, so might be possible that we don't have the supplier of plastic. Even plastic will become expensive in the future, and maybe the quality of the product will not be the same. The breakage and other stuff will create problem for the particular cause. So that would be a difficulty for us, right? So this is how, because I don't have the full question, otherwise I will go into detail more. So let's wait for the more question. Inshallah, I will upload soon. Keep in touch and keep motivating me and keep supporting me. Thank you very much. Take care, and Allah.